All right, let's jump right into a really cool thought experiment. We're going to look at what would have happened if you had invested just $100 a week for the last decade. Using real data, we're going to see how a super simple habit could have had a massive impact on your finances. I mean, seriously, think about it. $100 a week. For a lot of us, that's maybe dinner out with a friend, a couple of those streaming subscriptions we forget we have, or a new pair of shoes. It doesn't sound like life-changing money, right? But that's exactly what makes this whole idea so powerful. This quote right here, it's everything. It's the entire core of what we're talking about today. We get so caught up in what we can do right now, this week, this month. But the real incredible progress, that comes from small, consistent steps over a long, long time. Okay, let's get into it. We're going to tackle this simple but super powerful idea. And in the process, we're going to debunk one of the biggest myths out there, that you need to be rich to start building wealth. You know, so many people think the biggest hurdle is having a ton of cash to start with. But it's not. It's not about the amount. It's about building the habit. The absolute hardest part of this whole thing is just taking that first step. So to really see how this works, we're not just going to talk theory, we're going to run a little experiment with some simple, clear rules so you can see just how straightforward this strategy actually is. So here are the ground rules. First, the timeline. We're looking at January 2015 all the way through December 2024, a full decade. The what is easy, $100 every single week, no exceptions. The where, we're putting it into an S&P 500 index fund. If you're not familiar, that's basically just a basket that holds tiny pieces of the 500 biggest companies in the US. It's a super common, simple way to invest in the whole market. And the how? This is the key. It's a strategy called dollar cost averaging. It just means you invest that same $100 no matter what the market is doing. Up, down, sideways. You just keep going. Okay, so let's do the math. $100 a week, 52 weeks a year for 10 years, that comes out to $52,000. That's your money, the cash you put in from your own pocket. That's our baseline. That's what you contributed before the market had a chance to do its thing. All right, now for the part you've been waiting for, the big reveal. We know exactly how much money went in, so the question is, what did it turn into? So here it is. After a decade of just sticking to the plan, consistently putting in that money, after all those ups and downs, what was that 52 grand actually worth by the end of it all? You ready for this? Around $90,000. Yeah, just shy of 90 grand. Without any complicated moves, without trying to time the market, just by being consistent, that portfolio grew into a pretty hefty sum. Just look at that. It's so powerful when you see it side by side. Your contribution, $52,000. The final value, almost 90. That's the magic of compounding in time, turning your contributions into something much, much bigger. We're talking about almost $40,000 in pure growth. And the best part? You didn't have to be some Wall Street genius picking stocks or staring at charts all day. All you had to do was be patient and consistent. So you're probably wondering, how? How is that even possible? Especially since we know the world is, kind of chaotic. So let's break down the mechanics of why this simple strategy is so effective. And here's the kicker. That 10-year stretch was not a smooth ride, not even close. You had big, scary drops in 2018 and again in 2022. But even with all that drama, even with those years where your portfolio went down, the overall strategy still delivered big time. This is where that dollar cost averaging thing becomes your superpower. Because when the market dips, it's basically on sale. And since you're investing the same fixed amount every week, your $100 automatically buys more shares when they're cheap and fewer when they're expensive. You're turning a scary headline into a discount shopping opportunity without even thinking about it. So if we boil it all down, what did we learn? 4 simple things. First, you absolutely do not need a fortune to start. Second, consistency is king. It's way more important than how much you start with. Third, time is your most powerful ally. And fourth, this one's a little counterintuitive, but those scary market drops, they can actually be your friend in the long run. Okay, so that's the past. That's our experiment. But now let's talk about you, right now. Because if you're sitting there thinking, man, I missed out, I want you to stop that thought right there. The past is just a lesson. The future is the opportunity. Look, the whole point of this explainer isn't to make you feel bad about the 10 years that just passed. It's the exact opposite. It's to show you with real, hard numbers what is absolutely still possible for you starting today. I love this because it's so profoundly true. A decade from now, you're going to be 10 years older. That's a guarantee.
The clock is ticking anyway. The only real question is, do you want to be 10 years older with a portfolio that's been quietly working for you in the background? Or do you want to be 10 years older and still wondering if it's the perfect time to start?
And hey, let's be real, maybe $100 a week is a stretch right now. That is totally fine. Can you do 50? Can you do 25? The number doesn't matter nearly as much as the habit. The important thing is to just get in the game. Just start. So I'll just leave you with this one last thought to chew on. 10 years from now, what is your future self going to be grateful for? What's one small step you can take this week to get started on that journey? Because that's the one thing you have total control over right now.